So, you've decided to start your own business and register a legal entity. But before you continue, you'd like to do a little bit more research on what will be expected of you. Hi, I'm Lynette Harrison and you are watching Accounting ER. Let me run you through some of the basics that are important for you to know. The different types of company registrations in South Africa can be divided into two sections. A natural person, which would be trading as a sole proprietor or a partnership, and a juristic person, which would be a registered entity such as a CC, proprietary limited, or limited. Today we're going to be looking at a legal entity. Let's look at some of the different entities available. A closed corporation, which is also commonly known as a CC, is still in existence but is no longer allowed to register. Now, a CC will have from 1 to 10 members. A proprietary limited would have from 1 to unlimited directors. Now, this is a private company and cannot sell its shares to the public. A limited will have shareholders and must have a minimum of 7 shareholders to unlimited. These companies can be registered on the stock exchange and they can generally sell these shares to public. Examples of such companies would be Standard Bank, Vodacom, MTN, and Sasol. Advantages of trading as a legal entity would be that it is easy to transfer ownership and that the life of the entity is perpetual or uninterrupted. A disadvantage is that it is expensive to set up and to run, and there are many legal requirements. Let's look at the tax implications. A legal entity will be paying 28% from the first rand profit made. So in other words, if you've made 100 rand profit, you will be giving SARS 28 rand. Accounting requirements is that a CC needs to have an accounting officer. A PTY limited or a limited must be audited. Let's look at the legal implications. A legal entity is a juristic person, which means that there is a separation between the business and the natural person, and therefore also a separation between their assets and liabilities. Shareholder is limited to the extent of his original investment, and this is where the word limited comes from. Continuity. The continuity is unlimited unless it is intentionally terminated through either liquidation or deregistration. Now, a PTY limited and a limited will liquidate and have to go to high court. A CC can be liquidated in a magistrate court. To deregister an entity means to remove it from the register of companies and to cease to exist as a legal entity. In order for you to do this, you will need a tax clearance with all submissions being up to date and all payments to SARS being up to date. Although registering a legal entity is giving you some peace of mind that your personal assets will be protected, remember that this is only true to a certain extent. The moment you have signed personal surety for any creditors in the business, you will still be held personally liable for that debt. If you have a debit loan account in the business, in other words, you are owing the company money, you will still be held liable for the amount outstanding on your loan account. And lastly, remember that if there's any money outstanding to SARS, you will still be held personally liable. If you feel that you have any valuable information to add, please leave it in the comments below. Thank you for watching Accounting ER.